Evolution AB Q1 report. Buybacks are back in town. Evolution delivered decent numbers in their Q1 report. The headline numbers look worse than the underlying performance due to severe currency headwinds. Net revenues declined 1.5% and profits declined 1.1%. Underlying growth was stronger at nearly 7%, which is a strong improvement from recent quarters. The cybercrime in the Asian market has been a headache for Evolution for quite some time. This saw a second consecutive improvement with quarter-over-quarter growth of 2.2%. The positive trends have continued into Q2 and is very important for Evolution. The fact that Evolution finally gets some positive feedback on their fight against the cybercrime is much welcome. The growth in LATAM and North America continued with positive momentum. These regions represent the growth levers for Evolution, and with double-digit growth in both regions, it seems possible for Evolution to get back to growth for the full year of 2026. The clear downside in the report, which came as no surprise, was the development in Europe. Evolution has ring-fenced their entire operations in the region, but the channelization in the region is also proving to be very problematic. Europe alone is able to drag down the entire performance of the company, with a negative growth of almost 6% quarter-over-quarter. Over time, Europe will diminish in relation to the other regions, but will remain a problem for Evolution's revenue growth in 2026. The growth in RNG continued its improvement with close to double-digit growth. Compared to other actors in the market, like the recent IPO Hacksaw, the growth is not impressive, however. Evolution's most important growth segment will continue to be live casino for the foreseeable future. The margins in Evolution remain strong despite the many problems that the company face. As I've stated before, this is important to signal the competitive advantage that Evolution holds in their core markets. A slow and gradual decline will be concerning, but the margin above 65% is still very encouraging. Keep in mind that as the US market grows, margin will go down due to the lesser scalability in this market. The scalability of the business as a whole should still keep a margin well above 60% and must be tracked over time. Overall, the report was strong, with underlying improvements in most markets, with more room to grow. The most important thing for Evolution regards the capital allocation. As I've stated plenty of times, I would like to see less of a dividend and more free cash flow being deployed into buybacks. This is due to the low share price and lack of reinvestment needs in the core business. A few days ago, Evolution decided to deploy a buyback program consisting of all cash flows for the next year, in addition to the large cash position on the balance sheet. This was fantastic news and served as a trigger for the stock. Immediate concerns of large M&A deals or a potential buyout of the company should be put at rest. A small tangent about the buybacks. As a long-term shareholder, you want buybacks to be made at the lowest share price possible. The company has now committed to a very large buyback program. It is now in the interest of all long-term shareholders that the share price doesn't continue upwards before large amounts of buybacks has been deployed. I understand that it is difficult to own a stock and not wanting it to go up. But try to picture it like this. You currently own 1,000 shares in Evolution, roughly around 700,000 kroner. Within the next year, you will receive another 700,000 kroner in monthly installments that you plan to buy Evolution shares with, as you're very positive about the long-term story of the company. What do you want the share price to do in the meantime? You do own shares already, but if the stock rises, then you will get a worse return on all your future purchases of the stock. The ideal situation is that the stock remains flat. You get to buy all the Evolution shares that you want, and then the share price surges. This scenario is likely due to the still ongoing problems in Europe and Asia. Fast forward a couple of years, and Evolution may have returned to double-digit revenue growth and an expanding multiple. Let's hope that Evolution has bought back a lot of its own stock before this happens. Now, One last thing, a very important thing, before I wrap up this episode. The large buyback program is very welcome, but also brings a new risk to the fold. The largest shareholder, Ken Dart, controls more than 30% of the company. This very large buyback program means that he will increase his overall stake by quite a lot without buying more shares. Evolution's remaining shareholder base is weak, meaning that Dart has a possibility of acquiring the entire company over time. As a large shareholder, Dart may have incentives to keep the shares low in order to be able to acquire the company for a low price. Now, if he were to buy the company, that would happen at a premium of the market price of Evolution shares. If shares decline, say towards 500 SEK per share, due to more regulatory issues or any other problems, this would be positive in regards to the future buybacks. However, at a too low share price, Ken Dart could also try to acquire the company at a low premium. With the lack of strong shareholders, Dart may be able to pull this off at a share price that underestimates the long-term prospects of the company. This remains one of the largest risks in an investment in Evolution the way I see it. Normally, I wouldn't view a short-term decline in the share price of a company buying back stock as a negative. Due to the risks regarding the shareholder structure of Evolution, however, I wouldn't want to see a large decline in the share price. Let's say that Evolution shares moves towards 500 SEK a share. In this case, Dart could be tempted to put a bid on the company to acquire the company for 650 SEK per share, corresponding to a 30% premium. This is well below today's share price. Because of this looming risk, I don't want to see a continuing decline in the share price, despite the fact that buybacks would become more value accretive. I will be satisfied with large chunks of buybacks being made at a share price between 650 and 800 SEK per share, until I would welcome a multiple expansion for the stock. I own shares in Evolution and have increased the position in the last couple of months. This is not financial advice. Thanks for listening.